For our Monday special Midcap Mania with Nigel D'Souza. In these times of uncertainty, Nigel, you've picked up a pharma stock, so take it away.
That's right, Sonia. I picked up a pharma stock. Defenses have been doing well, so I did a lot of homework. And the company that I've come up with is Neuland Laboratories. So if you just take a look at what the business does, they produce APIs as well as they do CMS, that's custom manufacturing solutions. In their generic drug substances, you have prime APIs, that's more commoditized APIs, and there's also a niche market when in fact it's more specific, more specialized. So that's really what their business does. To show you the revenue contribution then, prior to this, they were focusing more on prime APIs. That's in fact the lower margin business, the more commoditized one. But if you just take a look at it, it's reduced from around 71% all the way to around 57%. And the company has said that going ahead, they're looking to reduce it to around 50%. So they'll be increasing their focus on the CMS business. That's a contract manufacturing solutions business. This is their target by 2018 itself. Now, I was going through the audit report and they've mentioned they're looking at higher margins, at more lucrative business as well. And the emphasis is going to be on high value products. It's perfectly explained because if you take a look at the last few years, in 2012, they produced double the quantity, more than 1,000 tons of APIs is what they produced. But just take a look at the average realization. It was only around $53 per kg. Now they're producing only 600, but the realization has gone up by 120%. So that's indicating the kind of focus they have on the high margin business. And that really explains why the sales numbers haven't really moved. They've been doing 450 to around 500 crores in the last few years, which maybe could be a bit of a disappointment, but their margins have improved from around 10% to around 16%. So over the years, they've been constantly focusing on better margin business. The profitability as well has looked quite good. So in addition to better margins, they have also focused on reducing their debt. So that as well should come up for you on the screen. The debt was more than 2:1 in terms of debt to equity ratio. Now, in fact, it's come down to around less than 1. So they have been paying off some debt as well. For the first half of this year, done very well. Top line growth has been close to 20%. We have the margins as well that have improved by nearly around 50 basis points. And profitability, that's improved big time, coming in at around 20 crores. You'll say it's not very cheap though. But if you just take a look at the EPS, what they have done this year is more than 70-75% of what they did in the last full year. So at the halfway mark, they've done an EPS of around 23 rupees. The entire of last year, they did 30 rupees. So that's telling you the good performance that they have done. But I was reading up further and there are a couple of big triggers going ahead. So they are looking at a couple of products which can come off, in fact, the potential to be a beneficiary of genericization. That means a couple of products are going to become, a couple of these molecules are going to become generics, and that gives them, some kind of a benefit. One drug is Advair. It's the largest inhaler in the world. It's a $4 billion market. And for that, you require two APIs. One is salmeterol as well as fluticasone, and they produce one of that. So that's giving them, a potential beneficiary there. And a large number of companies have already filed for this drug. So that's one of them. The second one is Depriven. That's currently owned by AstraZeneca, and that's a $250 million drug. So both these two, there's a potential that in fact they could get some larger business. Promoter holding should be up for you on the screen. The promoter holding at roughly around 50%. They also are looking at a scheme of arrangement as well going ahead. So that's the company up for you. As always, there are a whole host of risk because they get most of their revenue from abroad, and there are various other lists as well. Just keep an eye out on this one, Neuland Laboratories.
All right.